So you're new to investing and you want to learn how to get started. Maybe you got a good chunk of money saved up and you already know that you want to get started in investing. If you're new to investing, it's usually very common to feel extremely overwhelmed when you're first starting out. But do not worry, because in this video, I'm going to be covering the basics of investing and how you can get started. So let's kick this video off with defining exactly what investing is. Simply put, investing is the act of putting your money into assets with the expectation of earning a profit. Essentially, investing gives you, the investor, the opportunity to make your money work for you. And 99% of the time, it is completely passive. And there are multiple ways you can get started in investing, such as stocks, bonds, real estate, and so much more. All right, so why should you invest? Why should you use your hard-earned money and put it into an account and just let it sit there, or buy a house? What is the purpose? Why should you even get started? If you come from a similar past life as mine, you may have experienced people telling you that investing is extremely risky and most people fail at investing or lose all their money. No matter what you are investing in, there is always going to be a percentage of risk that is involved. But there are smart ways you can get started investing. But some investment types are much more conservative than others, and that I'm going to be covering later in the video. But it's also important to understand that investing can build you long-term wealth and also help you reach the majority of your financial goals and build a lot of security. And if you want to get rich, or maybe you want to be well off, saving your money is, simply put, not a viable way to do that. You cannot get rich by saving your money. And the way you see all these people making all this money is because they are investing it. All right, so now that you understand exactly why investing is important, let's get into the nitty-gritty on exactly what types of investments you could actually take action on today. Stocks. Stocks can be bought and sold on stock exchanges, and their value can fluctuate based on a variety of factors, including the company's financial performance, market conditions, and overall economic trends. Investing in stocks is a great way to build your investment portfolio, but it does involve a degree of risk. So the next one we got is bonds. Bonds is essentially when you loan money to a company or government and receive regular interest payments. When you buy a bond, you're essentially lending money to the borrower in exchange for periodic interest payments and the return of your principal when the bond matures. So bonds are actually considered to be lower in the risk rate compared to stocks, but generally they usually offer lower returns. A lot of investors I know typically store their money into bonds as a way to diversify their account and diversify their portfolio and help them build that steady income stream. However, the value of bonds can be affected by changes in interest rates. So it's definitely important to understand the risk that is involved before dealing with bonds. So the next one we have is real estate. Now this is my personal favorite. Investing in real estate is essentially purchasing a property with the expectation of making profit through rental income or appreciation. Real estate investing involves buying, owning, managing, and potentially selling property for the purposes of generating income or capital appreciation. And now real estate can include commercial real estate, residential real estate, or raw land. Three ways that you can make money through real estate is by rental income, which is the money that your tenants will pay you when they are renting out your property. You can make money through the appreciation of your property, which happens over the long period of time where all houses eventually go up in value, or essentially just selling the property for a profit. Real estate investing can offer a ton of benefits, including the potential for passive income, diversification of investment portfolio, and the potential for long-term appreciation. However, the potential risk for real estate also runs a bit daunting. Tenant default, property damage, and fluctuations in the real estate market are typically what we see for this type of investment. I bought my house last year when prices were rising, and I knew exactly what I was getting into. I'm going to be making a separate video on how to buy a house and the smartest way to buy a house in one of my later videos, but just understand it's very important to do market research before you go out and start buying all these properties. So last but not least that I have fit into this video are mutual funds. So mutual funds are a bit more conservative of an investment route. This is a type of investment that pools money from many investors to buy a variety of assets such as stocks and bonds. Think of it like this. Instead of investing your money into one single individual stock, your money is going into a basket of stocks that are grouped together, and so essentially you got your money in multiple different businesses and corporations. And a good example of a mutual fund is the S&P 500, which is commonly used today in retirement funds. But yeah, seriously, mutual funds are the most conservative in my opinion. I have my money in mutual funds and ETFs, and over time it can make you a killing amount of money. But when you're getting involved with stocks or you're getting involved with mutual funds or just investing in general, you want to have a long-term mindset. Unless you're doing things like day trading and swinging, that's a whole different mentality. But when you're investing to make money in the long run, you want to think long-term and you want to be patient and invest diligently. So you've been hearing me use this word diversification, but maybe you don't even know what it means. Diversification is a key principle when it comes to investing. Diversification essentially means spreading your investment across different types of assets to reduce your risk. You've probably heard this saying, never put all of your eggs in one basket. This essentially means that instead of dumping all of your fortune into one individual stock and it relying on one individual stock to grow, you have spread out your money amongst all these different assets. And if one of those decides to drop, well, don't worry, because you have all these other ones that you've invested in. When you invest into a singular stock, you run the risk of just relying heavily on that one stock. And if there is a crash on that one stock, you essentially will lose all your money. So that is why diversification is key. Before you start investing, it's extremely important to understand what your risk tolerance is. This refers to your willingness to take on risk to achieve a potential reward. And when you understand the key basis of all these things, the last and final step is actually getting started on investing. I know that this was a lot of information at once, but I'm sure you're super excited to get started or super excited to continue on your journey of investing. There are plenty of apps on the market that are going to open up your opportunities and give you a good experience when it comes to investing. I personally like to use Robinhood and TD Ameritrade. TD Ameritrade is where I invest into the S&P 500 in my mutual funds, and I also have one of my retirement funds on there, which is a Roth IRA. And on Robinhood, that is where I will invest a little bit more risky, and I'll usually put my money into things like stocks and things like Bitcoin. Other than those two, those are the two I personally use. You can definitely delve on and try to find out, which ones work for you. There are plenty of options out there for you guys to experiment with. Drop a comment down below and let me know which app you guys like to use. I know that this is a lot to take in at once, but the more you guys understand the basics of investing, the more comfortable and the more approachable you're gonna feel towards getting started with investing your hard-earned money to build you guys a fortune. And remember, investing is a long-term game. It is a marathon, not a sprint. Be patient and be diligent with your investments, and they will return you good amounts of money over time. Thank you for watching this video on investing for beginners. I really hope you found it helpful. And if you have any questions, feel free to leave a comment down below and I will get to it as soon as I can. Don't forget to like and subscribe for more financial videos and tips, and I will see you guys in the next one. Peace out.